Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement Audio Podcast. On this week's audio podcast, I share 6 ways to minimize your tax liability throughout the year. You don't need to wait until the end of the year to look for ways to minimize your tax liability. Tax planning should take place throughout the year to have you prepared well ahead of tax season. Here are 6 ways to help you minimize your tax liability that you can implement anytime before the end of this year. Number 1, update your payroll deductions. Double check that you are claiming the correct deductions and taking advantage of pre-tax benefits that can lower your taxable income, such as flexible spending accounts, a health savings account, HSA, health care insurance, flexible spending account, FSA, commuter benefits, and child care expenses. Number 2, minimize pre-tax retirement savings contributions. In 2022, you can contribute $20,500 to your employer's retirement savings plan. If you're age 50 or older, you can contribute an additional $6,500 to help lower your taxable income. Here are other ways or other tax liability reduction strategies. Whether you're an individual or a married couple, you can lower your taxable income while doing good for others by donating to an IRS qualified charity. To take advantage of charitable tax deduction this year, you must make your donation before December 31st. Here's some common charitable donation strategies to consider, and number 3 on my list, which are qualified charitable deductions, QCDs. If you're age 72 or older, you can use a QCD to donate to an IRS qualified charity of your choice directly from your IRA. The gift will not qualify for a charitable deduction, but will allow you to deduct the amount transferred to the charity from your taxable income. A QCD may be helpful if you will not reach a level of itemized deductions to exceed the standard deduction amount on your taxes. The maximum amount you may donate is $100,000 per year. If you are married and your spouse also has an IRA, you can donate $100,000 individually, but keep in mind that each spouse must donate the same amount. Number 4 on the list is donor advised funds, also known as DAFs. DAFs, or donor advised funds, enable you to donate assets to a charitable investment account and receive an immediate tax deduction. DFA contributions can be timed to coincide with high income years to provide a larger tax deduction. Donor advised funds grow tax-free, and you can choose which charities to distribute gift each year. Number 5 out of 6 is non-cash charitable contributions. You can use appreciated stock or assets you've held for more than a year as a non-cash charitable contribution by giving them to a charity. Non-cash charitable contribution will help you save on capital gains taxes. Make sure you secure a tax deduction to prove the donation when filing your taxes. If you use this strategy, consult with your financial and tax professionals to help you ensure this executes properly per IRS requirements. And number 6 is bunch your donations. Bunching or concentrating your donations in one year instead of several years can help you make the most out of your potential tax deduction. This strategy helps if your total itemized deductions fall below the standard deduction for a single year. By making charitable contributions for several years at one time, the total of the itemized deductions can exceed the standard deduction and offer tax benefits for 1 year. Make sure you visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, Certified Retirement Counselor and Managing Partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group LLC, a registered investment advisor. Private Advisor Group LLC and Cortburg Retirement Advisors Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.